October 2008. The banks are burning. An email hits a cryptography list. A cash system with no trusted third party. Signed, Satoshi Nakamoto. The promise, money no state could touch. The flaw, it could not scale. 7 transactions per second. The world moved in thousands. 2014, Satoshi goes dark. What was left was not a currency. It was something else.
So HardHat, what's the question that Bitcoin failed to answer?
I mean, throughput, I think most fundamentally, like performance of the chain. Um, and this is basically what the block size wars was all about, right? Just like uh, Bitcoin adoption was going parabolic. A bunch of the large participants like Coinbase and others, like really wanted to expand the block size to support like the growing demand. And it was kind of natural, like you have a technology product and users are starting to onboard to it, and all your systems start breaking, and like you need to bring on people to fix those issues and scale the systems. And I mean, essentially, the Bitcoin community wasn't able to implement those changes. Um, I think there's a long, windy story with probably like many different sides to it as to like why that didn't happen. But at the end of the day, the chain and token that bears like the BTC ticker didn't implement any scaling changes, and um, and so I think the network became even more dependent on the centralized exchanges than say it was before. And it was already quite dependent on the centralized exchanges even at the time. Um, so yeah, I was just in a system where if you try to stack up the Bitcoin network to any other payment rails, it's just it's like in a league of its own and how bad it is. Like it doesn't it doesn't support any sort of like consumer grade payments throughput. So uh, I think the average user that wants to use Bitcoin or get access to it, isn't able to do that via the main chain that Satoshi wrote about and built. They only really get exposure to Bitcoin or get access to it through these IOUs on the centralized exchanges like Binance and Coinbase and Robinhood and others. Um, and those exchanges provide a great service, but I don't see them right as like what Satoshi was writing about. Like I don't think Satoshi was writing about Coinbase. I think he was writing about like the blockchain network. And ultimately those institutions are not scaling self-custody to more and more users. So I think at the end of the day, that's really what matters. And it's really the fundamental problem is like an inability to scale and process user transactions.
A lot of people say that the white paper, the original white paper, is very simple. So why do people lose the vision the second they try to scale this thing?
Yeah, I mean, this probably gets to like the many sides of the block size war story, right? Everyone, there are a lot of different incentives at play, and um, and a lot of different ways maybe to interpret what Satoshi was writing about. But I think also too, like there's just the fact that like scaling these networks is hard. Like it's not um some easy, technical solution. Like it's taken Solana, probably coming up on like a decade of engineering work now, since totally like first set out, to create like a reasonably decentralized blockchain that can support high throughput, um, transaction processing. And even at the time, like for many, many years, right, it's like you had a whole group of Ethereum people that were basically saying this was impossible. That there's this blockchain trilemma that's like, oh, you have to sacrifice centralization in order to get to the high throughput. And so I think the Solana people were like really out on a limb for many years there, saying that like, well, this trilemma is not really a fact of nature, like it's just kind of a an observation that Vitalik had in a blog post, um and we thought we had solved it. um and and I think, like, it's just a very hard technical challenge. And then on top of that, right, like you have sort of various incentives, participants in the Bitcoin ecosystem that stand to have very, powerful businesses if Bitcoin itself cannot scale. So lots of right, like lots of venture dollars get invested into these quote unquote scaling solutions or centralized exchanges that go to offer solutions to the scaling problem. And I don't want to get too conspiratorial, but it's kind of like I think the worse the scaling problem is, like the stronger their business case is, right?
All right. Let's go back to the moment. The moment you decided that you knew you had to build something like this. Tell us about it.
Well, yeah, that's kind of a long story, because I didn't start with Ore. Ore was really, I think, my second big project on Solana. The first one, I think a lot of the OGs have heard about, but I can't really mention it without revealing, you know, too much identity. Um, but yeah, I mean, I started is kind of in developer tooling, sort of infrastructure space. Uh, is really where I started. And a lot of that was just very natural extension from my work at Uber, and like building, these payment systems, and sort of trying to map certain functions or features that I'd seen in the legacy payment space into, crypto world. Um, and that venture ultimately ended up like failing. It wasn't really a successful business. And then I was kind of, after shutting that down, I was kind of like between jobs basically. um and sort of thinking about like what to do next. And one of the things that I had spent a bit of time looking at was like bridging Bitcoin to Solana, of feeling that, okay, like now that I'm in crypto, I kind of understand the vision. I buy this idea of like a non-fiat store of value or non-fiat currency. And if there's any token out there that stands to become that, I think it's Bitcoin. But like, there's all these Bitcoin can't scale. Like you don't have DeFi with Bitcoin. There's no smart contracts. It can only process 7 transactions a second and all these things. It's like if we could bring Bitcoin tokens to Solana, this seems kind of like a very natural fit. And I don't think I was the only one, right, to have this idea. I think a lot of people have kind of thought about this problem over the years. And I don't know, the longer I kind of spent digging into the bridge technology and what would be required to get uh, BTC onto Solana, I just felt more and more skeptical that that was like the right path. There's just so many issues involved. And ultimately, right, like if you're going to try to bridge tokens from one chain to another, you kind of have to trust some custodian, or a group of custodians. There isn't really another way. You either place your trust with like a centralized exchange, who will custody the assets on one chain and then issue like an IOU on the other, or you place your trust in like a network of guardians, let's say, which ultimately like are, the custodian. Collectively, they they're the ones who sort of post proofs from one chain to the other that like, it's safe to issue these IOUs, that they have reserves for the IOUs. Um, and I don't know, I just became very skeptical that that was the right long term solution, and then almost like disillusioned, like kind of depressed for a bit, because it's like, well, this Bitcoin thing is great. It has a lot of momentum. A lot of people are brought into this vision, but like, I just don't see how this really becomes a currency, like a real, currency. Um, it's maybe a great investment vehicle or a great investment asset, but in terms of the like Satoshi's vision for this peer-to-peer currency, like that just seemed so far like removed from the current state of the technology, that I just didn't see a path from where we are today or where we were at the time to Satoshi's vision. So I think is sort of in that like headspace that I don't know, a stray thought just kind of came into my head of like, well, Bitcoin ultimately is just like it's code, it's a computer program, and we can probably rewrite, the core bits of that program as a smart contract, and deploy that on Solana. And that wouldn't, obviously be the BTC token on top of Solana, but it'd be that same idea of this like non-fiat store value that has this proof of work mining mechanism native to a chain that in theory has the scale and the smart contracts for DeFi, and sort of is scaling self custody more than any other chain that I was aware of. So
You brought up trustlessness with bridges. How much does removing counterparty risk decide whether something can really be a store of value?
well, when I first had the seed of the idea, I just kind of put it on the shelf. Like I I didn't set out and just do it right away. So it's just a bunch of other things going on, and I think I wrote like a note in my phone, and maybe I kind of remember like scaffolding a very simple demo with Anchor of like a core idea. There was like no emissions curve or no anything. It was just kind of like, can I validate a SHA-256 hash in a smart contract and then like mint a token? And so I created a demo, that took probably like, I don't know, 2 hours or something, like not too long, right? But then I just kind of filed it away and went on with life. And then some months passed, and the hackathon, the Coliseum hackathon, was coming up, and I was kind of in the middle of like talking with some of my old Solana friends about potentially going back to work and getting a job, and I was just kind of I decided to pull that idea off the shelf just as like a hobby, right? Like on to keep my skills sharp, I guess. And because it was the thing that of all the ideas I'd kind of been considering that I was most caught up with and like couldn't really stop thinking about. And so I decided to work on it, and then obviously launched it in the hackathon. And to be honest, I didn't expect much to happen, right? Like um I thought it was going to flop, frankly. I didn't expect what happened to was going to happen. But obviously it took off, and there's a whole feedback loop around the congestion of the chain and all of that, which I think helped facilitate the takeoff and propel it into sort of mindshare, greater mindshare. But I didn't really expect all of that. I thought it was kind of just people are gonna look at it and be like interesting, but forget about it. 10 minutes later.
Satoshi wrote the rules into code and disappeared. No founder to call, no one to petition, no one to overrule. Rules without rulers. That was the whole idea. A system no man could change, not even the man who made it. This builder is making the same vow, one freeze at a time. Chapter 2. The Freeze.
Walk me through how you actually think about committing a freeze, knowing that once it's locked, you can't undo it.
Yeah, I mean, I think freezing is critical. Like, it's absolutely necessary in order to remove the counterparty risk, right? Like, coming back to that, it's like you could argue, right? All the contracts in DeFi, Solana, Ethereum, Base, no matter what chain you're on, like if they have a upgradable smart contract, like you do have counterparty risk with the team or set of guardians that sign off on those upgrades. Like in the drift case, right? Is like you carry counterparty risk with the signers on the multisig. So like freezing is quite critical. And or the initial V1 version was frozen, right? Like when I launched in 2024, the contract was frozen at launch when I made the announcement. And so I didn't have access to the mint authority. And I think that was, part of what caught people's attention was like, launching from the get-go with a frozen contract. The only thing I left was a single admin function. And I think there were a lot of learnings from doing that. Because the only admin function I left with was at the time what we called the difficulty score, which is like how many zeros need to be on the hash in order for the hash to be accepted, essentially, and mint a new token. And I left that as an admin function because I didn't know what the right value should be. There was no way to like derive from first principles like what the right difficulty should be. And so I froze the contract but left the difficulty level, admin configurable. And that, in that 2-week period of the initial V1 mining became like a huge conversation because like, a lot of the community wanted to increase the difficulty. A lot of the community wanted to decrease difficulty. We had a ton of governance debates. I think we had some like votes on X. We had some votes on Discord. We did like a token weighted vote on, I don't know, one of the governance realms, maybe like one of the Solana governance platforms. And I think that was a big learning point for me in terms of like, if you leave something configurable, it will become a topic of debates like for governance, for sure. And so you need to be very careful about what you leave governable in a frozen contract. Now it turned out that like there was obviously a lot of interest in the OR system. The V1 as I had written it was not working in terms of distribution. Like a lot of the supply was going to a very small set of users, and that was part of what contributed to the decision to pause the V1. And so the way that we paused the V1, right, like I wasn't able to get into the contract and change it. So what we had to do was hike the difficulty score up to like infinity. So it was impossible to submit hashes and then do a whole hard fork of the token to a new token. Because that was the only way to move forward. Like we wanted to change the protocol anyway. So that was what we ended up doing in order to try to address some of the issues in the V1. But now that we have like done that hard fork migration, we have the new token. We've gone through a lot of different iterations on the different mining mechanisms. I think enough time has passed that now we are starting to feel more comfortable with the system, and it's like, okay, let's start freezing certain parts. And it's a big commitment, right, to like freeze the contract, because then you really can't change it after that. And sometimes conditions change, or a community member has an idea, and it's like, well, if you've frozen, then you can't really implement those ideas or integrate them into the system. So what we've done is taken what we call like a progressive freeze strategy, where we will break out certain parts of the system into a new program and then freeze just that piece. So currently, right, the OR mint authority, which is like the most sensitive piece of like who is allowed to mint new tokens, we pulled that out into a new program, and we implemented some rules in that program for like never mint more than 3 million tokens, and never mint more than 2 per minute is like the maximum issuance rate, and only allow this other sort of mining program, right, to be able to call in to mint new tokens. And we implemented just those very basic like supply constraints around the mint authority, and then froze that program. So that, right, gives the holders some inflation guarantees that the supply, no matter what we do to the mining game, like no matter how we change the board or all of that, like we retain flexibility to upgrade the core mining rules without having the ability to inflate away the supply, or change the inflation guarantees, the supply guarantees. Those supply guarantees are set in stone. And so we take a similar approach, right, to like the staking program. We've pulled out the staking system into a new program, and we did that after the drift hack. And we're in the process of freezing that right now, and it should be frozen within the next like 2 to 3 weeks, basically. We just have to work through some conversations with our DeFi partners who have dependencies on the staking program before we freeze it. But that way, right, like we'll be able to freeze the mint authority and we'll be able to freeze the staking program while still retaining flexibility to potentially upgrade the mining system itself.
And so speaking of the mining system, I mean, you guys had a big leap forward with V3, which was a massive change in the actual mining system itself. What do you feel like, particularly from that change, created the biggest catalyst for it?
Oh, a bunch of things. I mean, up until that point, or had only been like true proof of work through the V1 and what we call the V2 system. And like the longer that was going on, the whole value leak problem became more and more obvious, just more and more apparent. Like a huge portion of the emissions was going to a very small handful of users, and then getting sold to the market. And I think because that was happening at like the scale it was happening, it just became obvious that like there was a value leak. Like that the money the miners were spending on electricity to mine was essentially coming out of the value of the token as those miners who received the rewards had to sell in order to keep mining. And so I think we were sitting on that problem for a while and trying to find different ways to address it. Initially, without getting rid of the core, like true proof of work system. But there weren't really right. Like it was very fundamental to proof of work.
You built a lot of game theory into the new system. Did you see the agentic auto mining coming, or was it something that surprised you?
Yeah, I've definitely been surprised a bit. Like the, very first versions of the new V3 system did not have the auto miner. And so that was something we had to build quite quickly after we launched because the feedback just became apparent that users wanted to automate their mining. Which makes sense. Like it's kind of how miners would think about the proof of work system. Like you don't manually calculate every hash every round to kind of build a computer program to automate it. So that kind of carried over. But the main, I mean, the core idea behind the V3 was to try to address that value leak that was happening in the POW system. And the crux of it just kind of came down to understanding that like proof of work mining it's like a statistics game, right? Like every hash that you generate is a chance at winning the block reward. And the more hashes you generate, the better your chances of winning. And so you kind of pay the electricity company, right, to generate better chances, more chances, more shots on goal. And our thought was like, well, can we close that loop? So like rather than funds flowing out of the system or value flowing out of the system to electricity companies, is there some way to redirect those funds back into the token itself? And that was like the core idea. And we went through a few different designs of how to do that. And then the 5x5 kind of gamified version was the one that resonated the best with the community and just performed the best in terms of retention and stuff like that. So that was what we went with.
So hard. I want to go back to just a second what you talked about, the moment where you launch V1 and V1 goes crazy. Like it's going crazy, and you got a lot of followers coming on. There's a lot of attention, and you had to make a really big decision in that moment because people would easily say, "Well, the token's going. Let's just keep it going." Was there
Yeah.
any pressure at any moment to do things that you didn't want to do, knowing that the protocol wasn't fit to run the way you wanted to do?
The biggest driver for freezing was just recognizing that the supply wasn't getting distributed as broadly as I wanted it to be. So the game, it's hard to go back and remember, right? Like 2 years as to like what was happening. But the Solana was having a lot of issues. Partly due to partly due to other reasons, but there's a lot of congestion on the chain. And so the game really was not about mining at all. Like the vast majority of people who were mining ore in that day were not spending their time computing hashes. They were spending their time trying to get transactions to land on chain and just like submitting a transaction, waiting, submitting a transaction, waiting. And a lot of the transactions were getting dropped, and there's a lot of demand for like RPC providers who could guarantee that transactions will get landed in a timely manner. And it's like people who knew how the fundamentals of Solana, like there were, you know, a handful, maybe 5 or 10 people or so who, some of whom I knew, some of whom I didn't, that like, you know, were able to land transactions reliably in that time because they understood the innards of Solana, right? And like how to get transactions to land. But for the average user who didn't understand those things and like was not an engineer, and also remember this is like kind of pre agentic coding. Like we had chatbots, but they weren't good at coding, right? So you couldn't like vibe code some of this stuff. And like the vast majority of users were just not able to land transactions and get any ore. So that was where I kind of saw that this was like an existential problem, essentially, if the supply was to get too lopsided too early, that uh, it would kill the long-term prospects for the project.
Satoshi mined 1 million coins in the early days and never touched one. They still sit there, in plain sight, untouchable, his. He could have been the richest man alive. He chose not to be. This builder took nothing either. No allocation, no founder's cut. 2 men who walked away from the bag to keep it honest. Chapter 3. The Principle.
You have this thing with no token allocation, right? I the community all says this, the no token allocation. Now,
Yeah.
in yourself, I believe you didn't take any token allocation as well.
Mhm.
I say this to say I say that to say this is that Satoshi, he mined before it was actually like live to the public, and
Mhm.
it's told that Satoshi had 5% of
Mhm.
supply before
Mhm.
anyone was able to touch anything. Now you went a completely different direction because it seemed like to me Satoshi was about supply control to some degree. If that was the case, um, your thoughts on that, and also why you decided to do zero token allocation.
Yeah, there's probably a few different ways to answer that. Like one, there's like the high float, low, or high FTV, low float meme, right? Of like all the VC coins at the time, which I just thought was like, I don't want to get too aggressive here, but I was not a fan of the the low float, high FTV, you know, style of launching a coin. I just thought way too many people were getting sort of scammed in that scheme. And like it makes sense maybe for like a venture project, like if you view the token as some sort of equity like vehicle where, right, like a venture capitalist will take an early risk on a company, and so they get an outsized um portion of, say, the stock or the equity in the company, and then you go public later, and sell to retail investors. um and I think this is kind of like a separate conversation, but I think what was happening a lot of that time, right? Just like one, the teams were going public way faster than like before there was ever a working product. And so it's kind of like a .com style, um, I don't know, fundraising ecosystem where you just kind of need an idea, a brand, a domain, and anyone was able to raise effectively and then launch a token and sell to retail. And so there's a lot of that going on that, like, obviously a lot of people got burned. I was not a huge fan of. And what I wanted was like the original Bitcoin idea was like where I was coming from. So it's like this, the only way this works is if it's fair launch. Um, like like it's hard to imagine a Bitcoin style, you know, something that was intended to be a currency working if like 30% of the supply was just like signed off to 4 funds before it ever even launched. That just kind of didn't make any sense to me.
Was that hard? Like, because I mean, they would have handed you a bigger valuation. How hard was that to turn that down?
Well, in the V1 system, no, because there were no VCs involved at that time. And like it wasn't a venture, it was just like a hackathon project. So
Mhm.
I just kind of launched it. The V1 system was not hard to do that way. But when we did the hard fork from V1 to V2, that was when there was a lot more interest, right? And like Coliseum was interested, Foundation Capital, and some other funds that we ended up taking capital from. And yeah, negotiating with them, right, to like invest in a labs company without token allocation was rather difficult. And we took a hit, like the labs company took a hit on valuation because of that. So it wasn't cheap equity, right? But it was quite critical to me and I think to the project, and especially because like the V1, like Ore had already been marketed as like a fair launch token. So I think to go back on that just would have killed the project outright. And that was my feeling. That was like a lot of the feedback I was getting from community members and, you know, public and privately, of just like, we're doing this hard fork. We had the opportunity, right, to like sell insider token allocation on the V2, but I think it just would have killed the entire project if we had done that.
I'm gonna get a little personal now, like on this part, is that I, I don't myself, I don't like to shill hard like that with different type of creators, because you know there's a lot of bad actors and all this stuff out here, and it's just the things that you say are so aligned to my spirit in terms of like the true essence of Bitcoin. Like your tweet here, I have faith in the dream that is crypto. Like when you say that, bro, like to someone like me in a world of Solana where no one thinks this way, right? The real essence and the true essence of crypto, and you look at the crowd and the army that is around you now, right? All these people are like, not all of them, but a lot of them are old school Bitcoin people. To get these people to believe in what you got going on here, and you know how these Bitcoin people are, bro. You can't change any of their minds. And you have them in your chat. Your average age in the chat is about 40 years old. What do you think it is that lets these people believe in something? Do you think it's the mining? Do you think it's the missing piece in the essence that so many people want? Like, what is it exactly to you that keeps that type of person in the room? I told you what it is for me, but what do you think it is for the entire community that you have?
It's probably a few different things, but I feel like there are not many voices in the crypto sphere that still champion the original values. I think through the ICO phase, through the NFT phase, through the meme coin phase, through the low float, high FDV phase, like the crypto ecosystem attracted a profile of trader and investor and founder and VC that's kind of, you know, there's like easy money to be made by compromising on certain values. And so I think there just like aren't that many voices that are still trying to communicate what the original vision was and like keep that flame alive. And I think, you know, somehow our voice got through and like a small community has formed around that, trying to keep that flame alive. And so I think it's kind of important to like just expressing like what those like what those reasons are for like why we're in this space to begin with. Because without that, like crypto, it'll be like an incremental improvement on the financial system in terms of like lowering fees and stuff. But I don't think without continuing to champion those values that like crypto achieves that original vision of a non-fiat currency, which is sort of what I see as like, you know, one of the core things that Satoshi was trying to achieve.
Or is a store of value, right? What is the value of ore?
Well, a store value is the way I see it today, and my views on this have kind of evolved over time. I think it's a social network, right? Like
Oh, okay. Go ahead. That's original
ultimately,
cypherpunk. Go ahead.
like an asset like gold or silver, where they don't have like a whole lot of industrial value. Gold is not really an input into any end product that consumers buy. Like maybe a little bit of electronics here or there, but you know, it's not. And there's some jewelry, of course, but the utilitarian use cases for gold are like far smaller than what the annual demand for gold is. Like people buy gold for other reasons, clearly. And like if you ask like why does gold have the price it has, is like, well, because people value it that high. Like, you know, it's kind of economics 101. Like someone's willing to pay that much, so it is worth that much. And it's a shared belief system, which is ultimately why like Bitcoin, right, just like has the price it has. Bitcoin is an even more extreme example. Like Bitcoin is an input to like zero products. Like you don't build a computer with Bitcoin. or like a tractor or something. So it's not a commodity industrial input to any sort of end product or manufacturing line. But it has the $80,000 price tag it has because like a lot of people say it's worth that much. And so ultimately all of these monetary systems, including the dollar to a degree, is a belief system, a shared belief that you need a critical mass of people that all agree and say that this thing has value to them individually or collectively in order for it to bootstrap itself. And then that social network needs to grow. Like it needs to have evangelists who go out and recruit more people. Otherwise, it will die out if it doesn't continue to grow. So yeah, I mean, I view it as a social network and like the very classical definition of like each marginal user, right? Like each additional user who joins the network, like provides an extra marginal unit of value to the existing members, as in like it's one more added unit of belief, let's say, into the system. So yeah, I think store values of all kind are just social networks and shared beliefs.
Well, I kind of want to follow up on that one. So you locked the code before you actually built the believers. Do you believe going immutable first meant that you were skipping the social layer?
I mean, I think we're still very much like early in terms of trying to grow the social network. I view the current or social network as like it's strong and it's attracting growing mind share within the X crypto sphere. But I think outside of like, a small niche community on X and Discord, I don't think Or is broken into other sort of mainstream like consciousness, right? And so
Mm,
um or even just mainstream like crypto Twitter. Like I think Or has a lot to do to get the message out there and grow. So yeah, we definitely have a focus on like trying to solve those core technical challenges of like how do you design a store value system on top of Solana? Like there's a lot of technical challenges obviously involved in that, without introducing new sort of centralized dependencies on off-chain parties. And trying to remove those centralized dependencies is like a large part of the engineering challenge that we are currently undergoing. But yeah, I think there's in parallel with that, like all of this sort of marketing and recruiting and evangelizing work that like has to be done uh, in order for that system at all to have any value.
Satoshi built money to move. Instead, it learned to sit still. Locked in cold storage, wrapped in ETFs, parked on the books of companies that never spend it. The believers got rich and stopped using it. A currency became a trophy. This builder is building the thing people actually use. Chapter 4. The Economy.
HardHat, so talk to me about Or's volatility. How do you think about this concept?
Yeah, well, it's definitely very volatile. All crypto tokens are, to be fair. Like, um, and we see these like, or maybe more even than others, like because of these reflexive loops, in sort of the mining system. But I've seen these cycles a few times now, even before the V3 system, right? Like with V1, at various periods in V2, like there's kind of I don't know how to describe it. Like when something starts going viral, right? Like on Twitter, there's a very clear like it's very mathematical. Like you can see it in the charts and the volume and in the usage numbers and everywhere. Like there's just some K factor to like the virality of the idea, and it just like spreads and spreads and spreads and spreads. And then at some point it reaches some saturation and it goes the other way. And this happens all the time. And not just for Or, but like I've seen it personally in Or like 3 or 4 times now. But you see it for other assets too. And I think that's just kind of the nature of this like crypto investor ecosystem is like a lot of traders are very short-term focused. So they'll buy into something when it's on the way up. And that's why you get to the exponential on the way up. But then like they're not really believers. So once it stops going up or it slows down, like they exit very quickly. And so there's a lot of capital chasing capital, sort of playing the greater fool theory, and they're indifferent to the asset. It doesn't matter what the ticker is, what the token is, right? This is why meme coins were or meme coins was it's just like you just need some empty vassal to like, for the money to go into. And if you can beat the other participants by 10 seconds, then you might make a buck. And so there's no way, right, for Or to like avoid these people, like as we try to get the message out there. Occasionally the message resonates and it starts ticking off, and then these people buy in, and so you have volatility because of that. But we try to at least retain like the core believers, is the way I look at it, so that every time we go through one of these loops, like we end up a little bit higher with a little bit larger community than we started.
You crossed 11,000 holders after the release of V3. For the bigger funds to step in, realistically, they're going to need deeper liquidity. I'm curious, how are you thinking about thickening up those pools and supporting the liquidity pool for Or?
Yeah, I mean, it's definitely critical, because it's particularly for like larger dollar investments, right? Like, if it takes too long to get into a position, or even more concerning is like from the fund's perspective, right? Just like getting out of a position quickly, then they're just not going to make the investment in the first place. And so you need deep liquidity for that. And we've tried a few things. Like in the V2, we had a boost system that we ended up shutting down because it's too complicated. There's too much like discretionary input into how to incentivize liquidity, like which pools to incentivize and stuff. And I think it's very difficult from a protocol perspective to provide liquidity incentives. I think it very quickly kind of devolves into like a 2020, 2021 like yield farming style system, where you're just kind of like minting tokens to pay out to LPs, and then you inflate away the token supply to incentivize LP. And so we want to avoid that, right? But yeah, we're looking at the question, I think, from a few different ways. I do expect at some point here in the near future, like we will try to provision more liquidity, and in particular with like the prop AMMs, pretty close relationship with the guys at Humidify. And if we can get more efficient with liquidity, I think it will help a lot, just because the AMMs, like they're great for bootstrapping liquidity for like a low liquidity assets, like a meme coin or so on. But once we start reaching the, I don't know, like $30-50 million market cap, $100 million market cap, like you need capital to be more efficient. And in long term, right, you want to get to like an order book style, like where you have deep enough liquidity to fill the bid and ask on an order book. But I think the prop AMMs, they fill like a good middle ground there. And so yeah, I don't have anything to announce at the moment, but it is definitely something that's been on the like my mind and the community's mind for a bit, of like how to smartly provision more liquidity there so that we can get some higher trading volume.
Whose job is it to build that liquidity? Would you say it's something that the community has to take on, or does Regolith Lab step in and take part of that initiative?
I think there's like three different approaches. Like one is that they all probably need to be explored. Like from the labs and foundation perspective, we have funds we can allocate to liquidity, and we will. I think the main thing we are looking at right now is like how to do that smartly without just burning money. And so that's like number one. Number two is, because of what Or is and like the idealism behind it, we have had a bias towards like being a bit hands off with like open market operations, I guess you could say. Yeah, like we don't want to create the impression that there's some like central bank here that's like like the core provider of liquidity at and because that creates a risk too, right? Like if we are 90% of the liquidity, and then we disappear for one reason or another, it could be completely out of our control, then like that's a huge risk to the project. And so I have a personal bias towards more like organic growth. And we do see that when volumes pick up, trading volumes pick up, like liquidity follows. Liquidity follows volumes, and there's probably like a feedback loop where like more liquidity also like volume might follow liquidity too, right? if you have buyers that are just waiting for deep liquidity. So, but definitely liquidity follows volume for sure, because people chase the fees, the trading fees. And then the third thing is, from the protocol level, one thing we did run an experiment with a while back was like, with the funds that the protocol fees, rather than allocating 100% of them to buybacks, could we allocate like 10% to an LP position? So the protocol would take on an LP position. And this is a little bit more of like a defensive use of the funds. We ran the experiment, and the community feedback was like pretty strongly in favor of doing 100, using all of the protocol funds for, just direct buybacks as opposed to LPs. I think now there's a growing chorus of voices to try to bring back that sort of LP experiment and, maybe make it a little more sophisticated than we had it before. But do it a little bit more smartly. So there is, from a protocol level, like, some opportunity there to try to provision more liquidity. But there's a lot of questions, right? Like around what exactly should the LP allocation strategy be, and like who should decide those things, and like what pools do you allocate into, and there's just a lot of like discretionary decisions. And as much as possible, we're trying to avoid introducing discretionary decisions, because you either need some central party or committee to like make those decisions, which introduces all sorts of risks and questions, or you need a governance system like community governance. And I, I'm kind of skeptical of like community driven like investment funds where you have some crowd via some mechanism, whether it's voting or futarchy or whatever, making decisions about like what to invest in and what not to invest in. Do we put our LP in this pool or that pool? I'm skeptical of like crowd wisdom for some of these things.
And I'm very curious too about your speed to make decisions, right? And the way that you feel about making these decisions. The question I want to ask is, do you feel at all rushed to have to improve the protocol, or to have to change or lock up or freeze any of the smart contract, or do you feel like you're really on your own time?
We tried to move as quickly as possible. I think there's always a balance of, when we move really quickly, we often get it's like a doomed if you do, doomed if you don't kind of thing. When we move too quickly, we hear voices of like, oh, the rules are changing too much, and or is unstable. Like we don't know what it's going to look like 2 months from now. But then if we go a sustained period of time without any upgrades, it's like, well, where's where's the team? Where's the development? Like what's going on? So I think it's a little bit of a balance, working within community expectations, moving slowly enough that like things are stable, and like we're not chaotically changing things, like, without thought. I think there was a period there between the V2 and the V3 where we were trying a lot of stuff, and we kind of exhausted, and we were trying it all publicly too, which was like, and so it created a lot of chaos, because there was a lot of uncertainty, right, as to like what the protocol would look like coming out of the V2 to V3 transition. And from that, I think we had a lot of learnings as a team. I had a lot of learnings about like, I think we're a bit more careful now about what we communicate publicly, in terms of protocol changes and upgrades. And we try to work closely with like core community members who have been there for, coming on 2 years now, who have seen or go through all the changes. And I've been doing I've been approaching these V4 changes differently in terms of trying to get feedback from those core community members privately before we go into the public Discord and start the debates there, because otherwise it just gets too noisy and there's too much uncertainty, and things get screenshotted and posted to Twitter and taken out of context, and it's a bit too chaotic.
Understood. I think the OR community has a lot of great things to look forward to. One of those things is the OR Foundation, like we've mentioned, and how it's being legally formed right now.
Mhm.
For most protocols, a foundation is really just kind of like a marketing arm with a fancy name, right? What's your vision for this one though? Like, what does it look like when it's fully operational, and how does that change what OR can do that it can't really do right now?
The point of the foundation largely goes back to that observation that like the store value is a social network, and we need to grow that social network. And ultimately, that requires like an organized group of people um, to coordinate events and like run the socials. Like you can't decentralize an X account. Like someone has to post from the X account, and so you need to pay that person who posts from the X account, and be able to fire that person who posts from the X account, and and so you need some sort of human organization on the ground um, that can coordinate like real life on the ground operations and initiatives. And up till now, that has been the labs entity. Um, for a variety of reasons, though, my my approach, like I want to set up a sort of nonprofit organization that will, um, will be the organization who collects that admin fee and uses that admin fee to essentially drive growth and pull in more miners and spread the message and organize those events and run the socials. And I think they need to be in a kind of like um like for lack of a better word, like they need to have a sort of sanctioned like natural monopoly, sort of like it needs to be a nonprofit and they need to be collecting fees from the protocol. Um because if not, like if it's a for-profit entity and they're not collecting those fees, then they have to compete, and like then we would be competing with all the third-party mining clients and competing for volume and competing for users. And I don't think that like sets us up in um a good position with our community. Like if because ultimately we're the ones who are kind of thinking about these protocol design changes and proposing them with the community, and trying to make the changes that benefit everyone. Um, but if we are also in like economic competition with the third party mining clients and everyone else, it just I don't think it sets up incentives in the right way. So the foundation is really meant to be that nonprofit, like human organization that has like a very tight coupling with the protocol, obviously, and has very direct incentive to grow the protocol. The more third party mining clients, the better. And it's maybe slightly controversial, but like we've almost like shied away from we leave the core or supply side just like very basic, just like the bare bones implementation to allow the third party clients to, for room to innovate and compete and offer specialized UIs and like um, different auto miner conditions and strategies and stuff like that. Um, I'd like to offer just like the bare bones, like basic client reference implementation, and then the community can run with it and offer all sorts of specialized um, solutions.
To be money, a thing has to move freely. Bitcoin got deep enough to hold, never deep enough to spend. You could store a fortune in it and still not buy bread with it. Real money needs real depth, the kind you can move size through. That is the next problem he is trying to solve. Chapter 5. The Depth.
Now, when you get to the point when the freeze is done and the exchanges start to take over, how does ore not become paper ore just like Bitcoin did? How do you stop this?
Yeah, I mean, or fundamentally is very much a bet on Solana and the growth of the DeFi ecosystem on Solana. So I think baked into the whole or vision is this kind of assumption, right? That like like we believe in self-custody, we believe in permissionless finance, and we believe that on-chain DeFi markets will be more efficient and larger volume and win versus like the off-chain alternatives. And I think like you see this debate playing out today between like, you know, Phoenix and Hyperliquid and all the others. Yeah, I mean, I think that in the long term, I believe that is correct, that like the on-chain markets, I believe, will take volume from the off-chain centralized systems,
Wow.
simply because they'll be able to disseminate information faster. That is, if Solana, my opinion, if Solana stays with its like IBRL optimization, like with IBRL as the goal. So yeah, I mean, Ore is very much a bet on Solana.
That's deep. That's deep. That's deep. So let me ask you this then: if Solana, right? And this is something that we just asked the foundation. And I'm just curious on your thought process here. There's like this feeling in the room right now. Everyone's looking at Solana. They're looking at AI and how it's progressing, and they're looking around. The Clarity Act's about to pass, and like, damn, wait, hold on. Solana has a really good chance of taking it there, right? Wherever that may be, it could be trillions of market cap potentially. That's what can be grasped in the next 2 to 3 years. If that does happen, how does Ore play in the mix, and what's your vision of Ore in that mix?
This maybe returns back to our liquidity question, but one thing I've had in my mind for a while is that like Ore needs to build really deep liquidity with like a basket of RWA assets. So right now, Ore's liquidity is obviously very tied to Solana. Like the vast majority of the Ore liquidity is SOL based. I think in order for something to become a currency, right? Like it is a not just a store value, but like a medium of exchange. And medium of exchange meaning it is the asset that you moved through from one product to another. So what we kind of envisioned, right, was like a bunch of liquidity pools where like Ore might be paired with I don't know, uranium and let's say like silver or something. And then as like if you're trying to swap from one to the other, if the Ore based liquidity is deep enough, then the routers like Jupiter and stuff, like they'll route through the Ore pools automatically because that's what gives them the best price. Yeah, I think this is another, just factor, I guess, in the whole liquidity discussion is like when we go to deploy that liquidity, what we denominate it in, because it probably doesn't make sense, in my opinion, to deploy more liquidity in like the SOL Ore pair. I would rather deploy it in like an Ore and something else pair to sort of that ultimately will generate more trading volume and more fees back to the LPs. If we can build a sort of a deep network of assets around Ore.
You're saying that the big vision would be that when people would swap out, instead of swapping into Solana, they're swapping into Ore. Essentially, like when they're getting out of say a stock or something or whatever, they're swapping into Ore as a holding token, like a USDC kind of like thing. Am I getting that right?
Yeah. Well, the example, right, is let's say you have like Tesla and Apple on chain, and these stocks in the spot market, they will have liquidity pools. Let's say you have a liquidity pool of like Tesla USDC and Apple USDC. And so if someone's trying to move from Tesla to Apple, Jupiter and Titan and the other routers, they will route through the liquidity pools that give the trader the best price. And they also have like RFQ or like RFQ systems. So, market makers will sort of offer prices for both these assets as well. So it's not like directly, not every trade gets routed through AMMs on chain or even prop AMMs on chain, but trades do get routed through those pools. And the idea, right, is that like if you also set up an Ore Tesla pool and an Ore Apple pool, and the liquidity in the Ore Tesla pool and the Ore Apple pool is deeper than the liquidity in the USDC Tesla and the USDC Apple, that when routing from Tesla to Apple, Jupiter will naturally route through the Ore pools because it will offer the traders a better price. Yeah. and then LPs like will, there's kind of like a network effect built in there. Like they'll want to deploy to those pools because they get more fees and so on and so forth.
Every coin Satoshi made was paid for in power. Proof of work secured the network and burned the world to do it. The machines grew, the grid groaned, the throughput never moved. The question was never whether it was strong, it was what it cost and what it was for. This builder made his bet on a chain that could carry the weight. Chapter 6: The Cost and the Bet.
So the big thing with BTC is the whole energy thing. They say like the debate can be easily squashed by battery and things like that, right? So in terms of that, do you think it's impossible for Bitcoin to ever get to the level that people are predicting because of its energy consumption? Because of like the mining costs and then where we are in terms of just energy in general. I mean, it's like one of the biggest topics of conversation as of
Yeah.
late.
There's a lot going on there. For one, right, like the Bitcoin mining market is shrinking. I mean, well, static to shrinking, arguably. A lot of the Bitcoin miners moving their data centers from mining workloads over to inference workloads for AI because it's paying better. And there's some like hardware upgrades that they have to do, right? Like more networking, like optics and fiber and stuff to move data around the data center. But they already have like most of the hardware infrastructure that they need, and so yeah, I mean the market for Bitcoin miners is shrinking. And then two, like the other thing that like you kind of have with Bitcoin is the halvings. Like the halvings naturally cause consolidation in amongst the miners because every 4 years, like these companies, the revenue gets cut in half. So then everyone's bleeding, like everyone's in the red. And it's really just of a war, like a war of attrition to try to outlast the other companies. And so a miner, right, it's like they're all losing money. Like one will go bankrupt, then there's a little bit less competition. Their assets will get bought up by one of the larger players that has enough funding to survive this war. And naturally over time, like more and more hash power consolidates into like the larger and larger players who are more well funded. And this has been happening for many years, but is continuing to happen. And so there's just like some of the dynamics at play. I think in the current sort of Bitcoin mining space, I think the mining industry is providing, you know, somewhat of a service to the grid operators in terms of like their ability to suck up excess supply. Like if you have a really windy day in Texas or something, like you can, you know, there's an oversupply of electricity, and they can turn on a Bitcoin farm to match demand to that supply. But yeah, I think as more and more like these AI data centers get built out, like they're probably going to outbid the miners for that supply. They're definitely already outbidding them for like semiconductor manufacturing capacity. like they're arguably out. There's competition, right, between like the AI accelerators and Apple. Like um yeah, for because there's the semiconductor manufacturing line is so like they have so little capacity at the leading edge. And the AI companies are outbidding like smartphone manufacturers, and so they're definitely outbidding the Bitcoin miners, like for Bitcoin ASICs and stuff. So with all of this, right, is downstream of like consumers spending money on chatbots to OpenAI and Anthropic. So that's just like where the consumer demand is at, and then everything kind of downstream follows from that. And yeah, I don't take the view that like Bitcoin is a battery. I just don't like uh like it is a battery in the sense that like money is economic potential, and like you could spend a Bitcoin on electricity, You could swap it to dollars and then buy electricity with those dollars. So it is economic potential, but it is not like energetic potential.
A follow up to that now. So you're sitting here. I think the supply, the last time I checked it for ore, is around 460K, right? In supply.
Mhm.
Now, this thing has a max supply of 3 million. And obviously you have this system, right? It's like breathing in and breathing out, right? That's how I describe it for easy for people.
Yeah.
Now, do you think that it would ever reach 3 million in terms of total supply being out to people? Or do you think the way it's designed right now, even at scale, will allow this thing to keep breathing in and breathing out to allow the tokens to stay stable at this level?
On a long enough time horizon, sure. Like at the current emissions rate, yeah. One thing I have been thinking about, I haven't even shared this with the team yet, but I could kind of share it here. Is like we could implement some sort of emissions reduction function. So halving is a bit extreme. I'm not a huge fan of like the halving system where like, I think if emissions rate were to drop from 1 ore per minute to 0.5 ore per minute, that would be a bit excessive. But like you could imagine a system that like, once supply goes above 1 million, then drop emissions to like 0.9 ore a minute or something. And then, if supply were to exceed 1.5 million, then go to like 0.8 ore per minute. And so as like the supply reaches its eventual, limit or gets closer to that limit, the emissions rate reduces gradually over time. It's definitely possible. We haven't done that for like just a simplicity argument that like uh it is a simpler system to keep the 1 ore per minute. And there's been all these other design decisions that we've like had to settle on and deal with before coming to this like emissions rate question. But I think as the system matures and matures and we kind of get more data and we see, okay, how is the system breathing in and breathing out, what is like the trend in the emissions rate over time, like I think this question of should we implement some sort of like emissions reduction function uh becomes a little bit more of like a question worth considering.
Ore is in this very unique place. Like you guys have so many layers to what you have going on. You have staking, right, which is like traditional DeFi. You have mining, right? Mining is the traditional way of Bitcoin. And then you also have privacy layer in terms of shielded transactions, some of the properties that Zcash has. Now, I don't know if you know this, but there is some weird energy at time between people who stake and mine. Some of the miners believe the stakers should be mining every day, and it's not that much of their time. And I get this a lot. Everyone knows I stake, and obviously Wiseman are like pro or, and everyone's like, you gotta stake if you're gonna be pro or. But I wanted to ask you because you give this option, right? And I'm gonna take that option. That's just my style, right? But why even give the option? Why not just go strictly mining? Why even open it up to staking?
Well, people want yield. Like people want their assets to be productive. This is one of the biggest complaints against like gold and Bitcoin, right? Is like they're just unproductive assets. And for people want to park their wealth in productive assets, essentially.
So you don't hate those people that just stake and don't mine, all right? So we got to get this on record right now. So if
No,
you're
not at
just
all.
stake,
Yeah. I mean, the people who stake, they obviously believe in the vision. And I don't think you have to actively be mining to like, to be a part of that social network and evangelize and be a community member. So yeah, I think the stake serves as like the staking yield serves as a very nice like baseline attractor point for a lot of members of the community that say aren't actively mining on a day-to-day basis.
but you need the miners to keep the network going though. So how do you find that like balance between miners and stakers?
I don't know. It's something we are definitely talking about a lot with V4. yeah, trying to balance all the incentives between like the unrefined ore, the refining yield, the staking yield, uh, the mining rewards together, in sort of a cohesive picture that makes sense and like has, you know, different risk reward profiles for different profiles of users. So I don't think we have solved it. I think it's a question like we continue to talk about every day, and we'll, yeah, continue to iterate and try to refine on it, and hopefully get a little bit closer to the correct balance with V4.
The skeptics counted the years and called it a time bomb. A decade gone, billions raised, nothing built that lasted. Or maybe the man who disappeared was right, and someone finally picked the work back up, not to replace him, to carry what he started. Chapter 7: The Vision.
With V4, what's changing? And what's the last piece you're trying to take out of your own hands?
Yeah, it's going well. It'll be more like we initially were considering some very radical design changes. After kind of demoing those for a bit, we decided against the more radical options that we had sort of been considering, just simply because like I think it, you know, has been a lot of work and challenging to pull the community along for this vision of like the gamified mining and the 5x5 being equivalent to POW mining at a functional level. But I you know, I think we have sort of succeeded in that, and like the core community does agree that this 5x5 system is mining, and so we want to keep that and like build on that, as opposed to getting rid of that and starting from scratch on something new. So the V4 system is still based around that 5x5. There will be definitely a few changes though, like to the system that will, I think, make it a little bit more fun. And then two, the other big system that we've been trying to look at with V4 is the RNG. So right now, right, like the RNG is fed by this entropy service that we call, which itself is dependent on a server, like an off-chain server that Regolith Labs runs, right? So this is like a centralized off-chain dependency for the protocol. And our goal, right, has been to remove all of those little choke points where like the on-chain protocol is dependent on some sort of centralized off-chain party. I think we have to do that in order to just like, you know, realize the vision here. And so you know, we built the system in this way because it was like expedient and is kind of necessary. We didn't have any other alternatives at the time, but we've been really heads down, I think, for the last like month or so, trying to figure out how to create a secure RNG that does not depend on like a centralized off-chain party or off-chain server. So yeah, I think we have a system that will be will be pretty good. And so a lot of what's going on has just been testing that, modeling that system through you know, a bunch of different scenarios, and so that we can remove that dependency and get one step closer to this, you know, eventual goal of like the fully decentralized, frozen, immutable protocol.
Thank you so much, man. This was great. Like, this was really great. It was really insightful. And I know the community of Aura is really going to appreciate this. We appreciate you here at Wiseman, man. Like, you're doing a fantastic job, bro. It's rare to find devs like you. It is, like, who care this much about perfecting their craft. Not only that, man, your history, you know so much about what's came before you. And not only that, like, you read so much into what's happening in the future. True gem in the space, and just a gift to Solana, man. We want to thank you. This whole time, man, I swear to God, I was like, this guy got to be related to Satoshi or something.